This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Dow record. The blue chip index closes at levels never seen before, even as the day took a volatile turn.
Electric shock. GE loses money in the most recent quarter and has yet another surprise for investors. An SEC investigation.
Healthy returns. Apple wants to store all of your medical records in one place, your iPhone. Those stories and more tonight on Nightly Business Report for Wednesday, January 24th. Good evening, everyone, and welcome. I'm Sue Herrera.
And I'm Bill Griffith, in tonight for Tyler Matheson, coming to you once again from the New York Stock Exchange, where, as Sue said, the Dow closed at a record today. After a pretty rocky day of trading, the blue chip index did move in a wide range. It rose more than 180 points on the open this morning. Then it was down about 100 points mid-afternoon. Early optimism faded after a top Apple analyst questioned the iPhone sales growth in the future. Shares of Apple fell. The rest of the tech sector soon followed, and it capped gains for the broader market as well. When all was said and done, the Dow rose 41 points. That's a record at 26,252. The Nasdaq was down by 45, and the S&P lost 1 point.
And General Electric didn't help matters any. It was the worst performing stock on the Dow index, falling more than 2.5% after reporting disappointing quarterly results. And as Morgan Brennan reports, it also announced another surprise to shareholders.
Call it another kitchen sink quarter. General Electric missed expectations and disclosed an SEC investigation tied to last week's announcement of GE Capital's $15 billion insurance charge. GE saying the investigation is still very early and not unexpected given the magnitude of that charge. Still, it spooked Wall Street. Even analysts with buy ratings on the stock found little to be optimistic about right now.
Not a thing, except that one thing, that 2018 is going to be an awful year. In terms of what John Flannery walked into, remember he's a GE lifer, this is the biggest mess since Ed Breen had to walk into Tyco International over 15 years ago and save the ticker symbol.
Since taking the helm last summer, CEO and Chairman John Flannery has been embarking on a massive turnaround. Already, he's cut more than $1.5 billion of costs, with plans to cut more this year. He has said repeatedly that everything is on the table, including a possible breakup. But investors looking for more clarity on that long-term strategy didn't get it today.
We have a team dedicated to considering all the details and looking at the options that will deliver the best value for our shareholders and the most attractive jobs for our employees. The truly enduring strength of GE lies in our people. There will be a GE in the future, but it will look different than it does today.
Other key takeaways: industrial cash flow for the quarter and the year were better than expected, and GE did reaffirm its 2018 earnings and free cash flow guidance. Welcome news for analysts who were bracing for revision lower. The healthcare and aviation segments grew, and Baker Hughes, the oilfield services firm in which GE is majority stakeholder, posted better than expected results. But once again, power proved to be a huge issue. Profits plunged almost 90% last quarter, and the company is now warning it may get even worse in 2018.
When he first had his restructuring announcement in November, he said we're going to sell off $20 billion in assets, and now here it seems like maybe power is on the table. It's hard to value a company when you don't know what direction it's going to go in.
And that uncertainty sent shares lower again today. For Nightly Business Report, I'm Morgan Brennan at the New York Stock Exchange.
Elsewhere, the airline sector hit some turbulence today after Wall Street has expressed some skepticism about United Continental's announced growth plan. As we reported last night, the airline reported better than expected earnings and revenue, but investors are focusing on the company's aggressive expansion strategy. The concern is that it could lead to an airfare war. The company's CEO said that he's not surprised by that response.
It is a highly competitive industry, always has. We do this every single day, every day of the year. And so competitive responses will come and go. I think what's important is for United to have a very defined, strategic, transparent plan to everyone, including our investors and customers, about what we're trying to accomplish and do, and put the accountability behind EPS behind that.
Shares of United Continental down 11% today, dragged the rest of the sector with it as well. Sue?
Bill, now to the economy and the housing market. Sales fell more than expected in December as home prices rose and the supply of properties on the market dropped to a record low. That sidelined some potential first-time buyers. The decline follows 3 straight months of strong increases.
President Trump's infrastructure plan will reportedly result in about $1.7 trillion overall in investment over the next decade. That is a larger figure than was previously announced. According to Reuters, the president made that statement during a gathering of mayors at the White House today. More details are expected at next week's State of the Union address.
And as we mentioned, stocks rose early in the trading day, in part because of weakness in the dollar. The greenback fell to a 3-year low as traders tried to interpret comments made by the Treasury Secretary at the World Economic Forum in Davos. The dollar has been declining, though, for a while, and its impact on stocks and the economy quickly became a topic of conversation among CEOs at that gathering.
Usually, a strong dollar means a strong economy. But what you have today is a strong U.S. economy, and even stronger than what people expected, Japan, Europe, and China. So very often the value of the dollar relates to the relative strength versus what people expected. And so I think it's fine if it's weak in the short term.
Provided the weaker dollar is happening for the right reasons, makes manufacturing, makes exports, makes the U.S. economy more competitive. The other side of the story potentially is it coming from fears of protectionism? Is it coming from fears of pending or looming trade wars? And I think that would be much more concerning if that's the reason the dollar's underperformed.
Well, the dollar has been gaining a lot of attention, as you can tell. So let's take a closer look at what a declining dollar means for stocks and the economy. Joining us, Andres Garcia Amaya. He's the founder and CEO of Zoe Financial. Andres, good to see you. Thank you for joining us tonight.
Thanks for having me.
What's your version? I mean, our economy is growing, our stock market is at an all-time high, but yet the dollar index is at a 3-year low. Why?
Well, the interesting thing is that the dollar and stocks have the relationship of young siblings, right? I have 2 little ones at home. One moment they're playing nice, the next moment they're in the floor wrestling, right? So if you look at the last 40 years, the relationship of the dollar and stocks has turned from hot to cold. Right now, it turns out that there's a negative relationship, meaning when the dollar is falling, stocks tend to be rising. But that doesn't mean that there's causality, meaning just because the dollar's falling, that's not the reason the stocks are rising. You got to remember, right? The dollar prior to 13 months ago had been rising for 5 years, and stocks were also rising, right? So there is not a direct relationship there. Or there's no causality between the two, even though right now there seems to be the case.
Andreas, what about, though, the cycle of the dollar? It tends to have longer cycles. So what is that telling us about what it portends for the economy and also for stocks, if indeed we've started a new cycle?
That's a great question, because when you look at the long term, the dollar is like this tank that once it starts moving in a direction, is very hard to turn around and move the other way. And we had a very strong bull cycle for over 6 years, and now we're maybe in the 2nd or 3rd inning of a bear cycle for the dollar. So I think there's still a lot of room for the dollar to continue to depreciate. And actually, in the earlier clip, you had Jamie Dimon mention this relative growth story. I think that's one of the main drivers, meaning, yes, the U.S. economy is doing great, but it turns out that the rest of the world now is actually growing at a faster pace. It's accelerating at a faster pace, and that tends to be dollar negative.
Before we let you go, what this means to our viewers out there, typically a lower dollar means higher inflation eventually. Is that where we're headed?
Well, the way that I would look at this is for stocks, there's not direct relationship here in the U.S. But if you're looking at what opportunities that might present itself, is international stocks do have a strong relationship, meaning when the dollar is weakening and you're a U.S. investor, you're buying stuff abroad in which their currency is appreciating. Right, so that's something to keep in mind. And yes, you are right. A weaker dollar does tend to have an inflationary pressure to the economy, which if it's starting from very low levels is not a bad thing.
Andres Garcia Amaya with Zoe Financial. Always good to see you. Thanks for joining us tonight.
Thanks for having me.
It is time to take a look at some of today's upgrades and downgrades. McKesson upgraded to buy from hold at Jefferies. The analyst there citing stable generic drug prices and also McKesson's discounted valuation compared to its peers. The price target was increased to $205 from $165. McKesson hit a 52-week high, rising more than 2% to $174.58. Huntington Bank shares was downgraded to neutral from outperform at Macquarie. The reason is valuation. The firm kept its price target at $16.50. Huntington closed at $16.11, up 7 cents. Bill?
And Nomura has initiated coverage of Microsoft with a buy rating. The firm sees Microsoft as what it called an integral part of an enterprise's digital transformation. Nomura has a $102 price target on Microsoft. Shares of that company touched a 52-week high today before closing at $91.82. That was down 8 cents. And not such good news for Valeant Pharmaceuticals, which saw Goldman Sachs initiate coverage with a sell rating. Goldman cites a difficult balance sheet, ongoing litigation risk, and muted near-term growth due to competition. And the price target they put in, $18 a share. Valeant closed at $19.88. It was down 11% today.
Still ahead, will the new tariffs dim the once bright solar outlook?
AT&T is urging Congress to pass an Internet Bill of Rights that would guarantee an open internet and privacy protections for customers. The company took out full-page ads in multiple newspapers today. AT&T CEO said that it's time to end the so-called net neutrality debate once and for all by writing new laws.
Qualcomm has been fined more than $1 billion by the European Union. The EU says Qualcomm paid Apple to use its chips exclusively for the iPhone and iPad. The watchdog ruled that the chipmaker took advantage of its dominant position in the market.
Its illegal behavior denied customers and other companies the benefit of effective competition, namely more choice, more innovation, and this in a sector where there is a huge not only demand, but also potential for innovation.
Shares of Qualcomm finished the day down just a fraction. Bill?
LG Electronics plans to raise prices on washing machines after the president's approval this week of steep tariffs on imported machines, which we told you about yesterday. According to the Wall Street Journal, consumers can expect to see prices go up by about $50 on most of its washers and dryer models. It's not immediately clear, though, whether LG competitors will follow suit. Sue?
And the solar industry bill is still trying to figure out the impact of those tariffs on its business. And for one company, the future is pretty cloudy. Aditi Roy is in San Jose, California for us tonight.
Silicon Valley-based SunPower has been in the solar business since the 1970s, making and installing solar panels and cells. But over the last decade, the industry and the company has been on an upswing. SunPower recently built this R&D lab. The solar industry has also exploded, with improved technology bringing down costs and more homeowners, businesses, and utilities incorporating solar energy into their systems, creating tens of thousands of jobs every year. But now, with President Trump announcing tariffs of up to 30% on imported solar panels and cells, industry officials worry that blazing growth could come to a screeching halt, given that nearly 90% of U.S. solar panels and cells are imported.
If it stays as is, it's really bad for SunPower.
Tom Warner is the CEO of SunPower. While the U.S.-based company manufactures its own solar panels, it still has to pay the tariffs because SunPower has manufacturing facilities in other countries.
Which seems really ridiculous. You've got an American company, $1 billion of payroll in the last 5 years in America, and you see some of it here, with unique technology that American customers want, and we're going to pay the highest tariff.
Warner says it could mean job cuts to the company's 1,100-member workforce and the 17,500 other jobs it supports, like installers and suppliers. And Warner says it doesn't make financial sense for the company to bring its manufacturing back to the U.S. because the tariffs only last 4 years, and it would take 2 years and hundreds of millions in capital to build a manufacturing plant in the U.S.
Our shareholders expect a profit. And if we have more costs, money's got to come from somewhere.
They're not alone. The Solar Energy Industry Association estimates 23,000 U.S. manufacturing jobs will be lost this year because of the tariffs, saying most U.S. solar companies either rely on imported panels and cells or manufacture other components that would not be protected by the tariffs. With their costs rising, they will either have to make cuts, raise prices, or both. It's unclear how much consumer prices would rise. For now, SunPower plans to apply for an exclusion in hopes the company will not have to pay the tariff.
We'll pay more tariff than any other solar company in the world.
But some U.S. solar companies stand to benefit from the decision. SolarWorld, which is one of the companies that brought the original complaint that led to the tariffs, said they are hopeful that the tariffs will be enough to address the import surge. For Nightly Business Report, I'm Aditi Roy, San Jose, California.
United Technologies reported higher sales in all of its divisions, and that's where we begin tonight's market focus. The jet engine and elevator maker topped expectations and said that it expects sales growth momentum to continue this year. UTX said that a strong driver of future revenue will likely come from its GTF engine. That's the company is touting it for its reliability and fuel conservation.
Last year, we shipped about 374 engines. Importantly, that's triple the production rate we saw from 15. 2018, we probably ought to get to double the production again. And importantly, there's about 8,000 engines in backlog. So this is the future of commercial aviation at Pratt & Whitney. Customers love it.
Shares fell marginally for UTX today to 135.68. A rise in sales helped industrial supplies company Grainger report improved earnings that topped expectations. Grainger also said that it was raising its earnings guidance for the whole year thanks to the company's latest results and tax reform. Shares popped by 18%. Matter of fact, it was the best performing stock in the S&P 500 today, closing at 271.97. And Comcast reported stronger than expected earnings thanks to strong performance in its theme parks and growth in high-speed internet subscribers. The cable conglomerate also raised its quarterly dividend by 21% to 19 cents a share and said that it plans to buy back at least $5 billion of its own stock this year. Comcast shares rose 1% to $42.99. Full disclosure, Comcast is the parent company of CNBC, which produces this program.
Higher onboard spending and lower operating costs helped Royal Caribbean cruise past expectations. The company also said it's in a good position to raise prices this year thanks to a strong number of bookings.
We're in a very good book position. We normally turn the year with about half of the next year booked, and this year we've said we are at the highest level of bookings in our history.
Royal Caribbean shares rose 4% to 132.51. Puma Biotech says its breast cancer treatment is facing regulatory hurdles in Europe, just 6 months after the treatment won approval here in the U.S. The drug maker said European officials have raised some questions over the medication's benefit-risk assessment, adding that it likely will not be approved without additional trial data. Puma Biotech shares plunged 28% to 64.70. And after the Bell Ford posted profit that missed expectations, sales were stronger than expected, and the automaker said it's made significant progress in its strategy to expand its smart car capabilities. Ford shares initially slipped in the extended session, but ended the regular day up fractionally to $12.05.
Apple is adding new battery features to its next iOS update. The company is going to allow users to turn off a feature that slows down iPhones that run on older batteries. Remember, last month, Apple confirmed that it could slow down the performance of older model iPhones, and that caused a big backlash among users and resulted in a number of lawsuits.
And Apple is making more inroads in the healthcare space. The tech giant said an upcoming iPhone update will give users the ability to view all of their medical records in the phone's health app. CNBC.com's Christina Farr has the details of Apple's latest push. I mean, it's pretty amazing, Christina, but should we be concerned about all of our health data getting into the wrong hands if it's all in one place?
Absolutely, and that is a great question, Sue, that a lot of people have been asking, because we're not just talking about the kind of data that you get from a Fitbit, like your steps. We're talking about your lab reports, your immunizations, all of your procedures, and Apple's going to have that now on the iPhone. But the company told me yesterday that it wants to make clear that it's not going to have access to this data. It won't see it, so that you can feel secure. And it will be protected, of course, with your passcode. It's really about the relationship between you and your hospital, or you and your doctor, and not about Apple.
You know, Chrissy, as you well know, this type of business is littered with failure. Microsoft and Google have not been able to make this a success. In fact, Google hell shut down because consumers simply were not using it. So why should we believe that Apple can be successful this time?
Yeah, absolutely. It was 2011 when Google announced that it was going to shut down its Google Health ID, and it was the same thing. It was, can we bring medical records into a place where consumers can view them for the first time, because it is such a hassle to not have that information there when you need it. But it just didn't work because of lack of traction. But things have changed now. I mean, from a regulatory standpoint, from a health privacy standpoint, suddenly it's become possible for a company like Apple to really do this and make it work. And I've seen it, I've played with it, and it is just a lot easier. So I think this is going to get much broader adoption than we've seen before from a company like Google. And who knows, maybe they'll follow suit and try the same thing out again if Apple can make this work.
Keep track of it for us, Christina. Thanks so much. Christina Farr with CNBC.com. Bill?
And coming up, why Americans are falling out of love with the king of beers. Toys R Us is closing 20% of its U.S. stores. It works out to about 180 locations. The decision is part of the retailer's strategy to emerge from bankruptcy, which it declared last year. Toys R Us is facing increased competition and a shift toward online shopping. These closures are expected to begin early next month.
Well, golf is a passion for many, especially Bill Griffith, but it's also big business. It's estimated that that sport generates almost $70 billion in economic activity in the U.S. annually, and it supports about 2 million American jobs. So Dominic Chu traveled to Orlando to see how that industry is holding up.
It may be the middle of January, but the sun is shining on the golf industry. A business once in recession is enjoying a recovery. The PGA Merchandise Show, known as the major of golf business, is evidence of just how far the sport has come. 40,000 people and 1,000 companies in attendance. 10 miles worth of display aisles and corridors showing off the latest golf trends and gadgets. This year, the game's industry leaders have reasons to celebrate.
I think the golf industry should be excited about three things. Number one, advanced technologies from companies like TaylorMade. Number two, initiatives across the board to get juniors into the game. And number three, the excitement going on the worldwide tours and specifically on the PGA Tour with the world's best athletes. What's not to get excited about?
More people are taking up the game, and equipment sales appear to be on the rise, but there's still work to be done.
The game needs to be more diverse. The game needs to look more like the face of American society. How do we do that? We are wholeheartedly following ways and building initiatives to bring more diversity into this game, to make it more accessible. As I said, to bring more women, bring more children, boys and girls, bring more minorities into the game.
Bringing younger generations into the game is something many companies are actively working on.
We think it's all about game enjoyment. So on the Puma side, it's look better, feel better, play better, making stylish stuff. And then we think on the club side, it's really more data, more information to help the golfer, again, enjoy the game. We think that data is going to help them practice better, practice smarter.
The meetings and contacts that happen here are going to set the agenda for the entire golf industry, both this year and beyond, all with the ultimate goal of growing the game. For Nightly Business Report, I'm Dominic Chu in Orlando, Florida.
Yes, I'm told that Americans do love golf, but they also love beer. And for the first time ever, America's 3 top-selling beers are all light beers. One iconic American brand isn't as appealing as it once was, apparently. Landon Dowdy has our story tonight.
The king of beers is losing a bit more of its shine. Budweiser falling 1 spot to 4th among the best-selling beers in the U.S., according to a report by Beer Marketers Insights. Anheuser-Busch's flagship brand now trailing the company's own Bud Light and 2 of competitor Miller Coors brands, Coors Light and Miller Lite. It's the first time all 3 top-selling beers are light beers. The move continues a downward trend for Budweiser, which held the top spot as the best-selling beer until 2001 when Bud Light dethroned it. Coors Light knocked it from the number 2 spot in 2011. Budweiser is not alone in falling sales. According to market research firm IRI, all 4 of America's top-selling beers posted declining domestic sales last year. It's a trend that reflects the overall struggle in the beer industry as consumers turn to wine, spirits, and craft beers.
You have consumers who are gravitating to a whole wide variety of different brands now, craft beers, import beers. Bud is, one of the larger brands. It's got obviously a huge target on its back, and it's one of the most impacted.
One bright spot for Anheuser-Busch, the Michelob Ultra brand, which saw sales rise in 2017. For the 36th year in a row, the company will be spending big on ads during the upcoming Super Bowl, but it remains to be seen if that buzz can translate into increased sales. For Nightly Business Report, I'm Landon Dowdy.
And before we go, here's another look at the record day on Wall Street. The Dow rose 41 points to a record, but the Nasdaq fell 45 and the S&P 500 was off 1. And that will do it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.